Hello and welcome back to the channel. So if you guys are new here, this is the Nordic Finance Trading channel. We cover all things AMC, all things crypto, all things short squeezes, all things speculative investing. So right now we are going over AMC Entertainment. It's had a little bit of a rough patch. We're going to talk about kind of macroeconomic conditions, how hedge funds are kind of screwing the whole market, and how the economy might actually be affecting AMC price as a whole. So we're going to jump right into it. That was kind of a lot. What do I mean by all that? So hedge funds actually own large amounts collectively between all the hedge funds. They own a pretty large portion of market float. And when they're actually brought into conflict, like they were with GameStop, like they now are with AMC as well, they actually have to cover positions, sell off other positions to be able to cover the crazy margin requirements for AMC and GameStop. And what that means is that a lot of kind of positions that are inflating the price by just being large off-market blocks come on market, and that affects the supply and demand models, kind of changing the way the markets work as a whole. So kind of in simpler terms, hedge funds own a lot of shares of a lot of companies. When AMC spiked, they have to look at what they need to sell off and when to be able to cover the increased price of their AMC position because they're short AMC. So there's a lot of unforeseen consequences when hedge funds lose money. Now, during the GameStop squeeze, this was actually brought up as a reason to not short the stock because hedge funds were the benevolent carriers of the market that were somehow benefiting all of us. Now, I don't know about you guys, but I don't think large blocks of privately traded shares held in dark pools benefits the retail trader, benefits the economy, benefits the world at large. To me, it kind of sounds like it benefits what is the pseudo financial Illuminati. If you think about it, it essentially benefits a very, very small percentage of a very, very select few who have access to the private dark pool trading pools. And besides the point, it's not in the best interest of the fair, open, and free markets of the United States and the world to have that happening. So regardless if that's your opinion or not, moving on, AMC rising like this has had some unforeseen consequences. The market at whole has been selling off. That combined with consumer price indexes spiking, that kind of means inflation is on the rise. Looks like inflation is a little bit less transitory than the Fed had initially projected. Who would have known that having 40 to 60% of all money in the world created this year for the financial reserve currency would have caused inflation? When you look at the numbers in hindsight, things are pretty obvious. When you look at the numbers as the world is panicking due to a virus and unforeseen circumstances and a market crash, things are a little harder to gauge. Hindsight's 2020, easy to be critical of the government after they've done things, but in the moment, the stimulus packages, everyone enjoyed it. No one was really complaining. Some financial experts were already saying this is a problem, and here we are a year later kind of seeing the beginning of those problems take place. So that also kind of contributes to what's going on. So with all of that combined, you have hedge funds kind of having to sell off large portions of privately held companies. You have AMC becoming a pseudo inflation hedge, if you think about it, because as these hedge funds begin to feel the consequences of the market crash, it becomes a cycle, and as more and more retail traders seek shelter from the weakening dollar, I think you'll see Bitcoin do really well. I think you'll see AMC do really well. I think you'll see GameStop do really well. I think you'll see all heavily shorted stocks do fairly well in comparison to the market as a whole right now, because right now retail kind of banding together more interest on these stocks. And this is all of course just opinion, not financial advice, I do foresee these heavily shorted, heavily talked about stocks outpacing the market as a whole as we kind of go into very uncertain market directions right now. The whole market kind of seems torn. There was a really long period over the last couple months when the market was completely decoupled from reality, and I think now a lot of people are kind of waking up to the fact that these prices are highly speculative. The economy is not backing up the forecasted growth that we're seeing in a lot of the price projections. So with all of that kind of fear, uncertainty, and doubt in the market as a whole, I see these heavily talked about names, AMC, GameStop, Bitcoin, even potentially even Dogecoin. I see these very talked about names being potential safe havens when it comes to outpacing the market as a whole with everything going on right now, especially when you factor in what we've talked about with hedge funds, how they control large portions of the market, how they have incredibly large exposure to large portions of the market. So when they do poorly, the market hurts. In 2008, it was actually talked about how hedge funds kind of potentiate every trend, and their own losses and their own personal balance sheets create problematic situations, conflicts of interest between the market and the hedge funds. It's really just an interesting situation. There is some kind of innate corruption when you think about what a hedge fund's goal is compared to what the actual goal of the market is. Hedge funds claim they aim to rectify the market and weed out bad actors and such, but I would potentially argue that hedge funds have become the bad actors that they have been trying to get rid of. When you talk about in the 2020 financial crisis and that flash crash, the hedge funds went short. They were swallowing up 401ks, pension funds, retirement accounts, and they were putting them onto their own balance sheets by going short the companies that they had previously been long for the past 3 to 4 years. So it's kind of an interesting situation. The organized, predatory nature of hedge funds is kind of becoming less and less appealing to the world and to the retail trader as a whole. There's definitely a divergence between the wants and needs of the 1% and the 99%. And hedge funds are essentially a financial instrument of the 1%. It's very interesting how all of this is playing out. And I think AMC and GameStop have really put a lot of this on the public foresight. It's put it in the news. It's put it on the front page of Twitter. This stuff wasn't really talked about a whole lot. In 2008, it was talked about. Occupy Wall Street movement, all of that stuff did happen. It's still technically happening. But really these movements with these two stocks is kind of the beginning of what I would believe to be the end of hedge funds being so public, hedge funds being so aggressive and blatant, and hopefully this is the beginning of the SEC taking a slightly more active role in managing these predatory actors in the market. So if you found any information in this video helpful, please like the video. Please subscribe. Please share this video so as many people can find it as possible. If you are holding AMC, let us know down in the comments how long you've been holding AMC. If you are holding GameStop, let us know down in the comments when you first picked up GameStop. And as always, guys, this is not financial advice. This is all opinion, all speculation. This video is just made for entertainment purposes, and I'll see you guys in the next one. Take care, everyone.